Thank you so much for hanging out with me today. I am JB Bryan, the President and Chief Investment Officer at JB Bryan Financial Group. Thank you all for just being here for me on the webinar as we get a better understanding of the webinar and how to fully utilize the investment. So if you're not participating via the webinar, then please email me at jb@jbbryan.com so that you can get on our email list, or go to AfroEconomics.com, register, and you'll automatically get added as well. But definitely, I'll make sure that you participate, because I want all of the participants. I'm excited because we're getting more and more each week that are participating, and it allows me to see what you're interested in, because we started off today with just doing a poll, and we have like 67% of the participants in the webinar. I said that their main financial goal is starting a business versus retirement, selling a business. Debt freedom came in at 33%. Credit repair, that's not a concern today. Investment selection will be a concern by the time we finish talking about stock investing. That's what our discussion is on today. And even that question was about budgeting. So we have 33% said debt freedom, and the other overwhelming percentage said they want to start their own business. So we have to have more discussions about starting our own business. So thank you so much for participating. Now we're up to 75% of starting their own businesses. I bet if we could have more than one response, because there's probably a lot of people who want debt freedom and start their own business, and might be budgeting and homeownership and investment selection. So, but today I want to talk about investing as a owner of a registered investment advisory firm and the chief investment officer at JB Bryan Financial Group, a registered investment advisory firm and the home of AfroEconomics. Well, that's what I do. And I try to approach it in a holistic approach. And that's why we have the membership for AfroEconomics, because when you join, the first thing I do is send you a link about financial planning. So I want to set up your financial plan. I want to know what you're doing. I want to see where you are financially. I want to see what your net worth is. I want to see what you have available. I want to see if you're participating fully into your work plan. Because most of the people that are investing or in the stock market, I would say, probably the majority of the assets that are in the marketplace are through retirement accounts. If you're self-employed, through your own retirement account. If you're working for someone, through the work retirement account. But it still could be going into the company individual stock, or it could be going into the mutual funds that the company has available to you. But more and more, when I see that when I'm sitting down with my clients and AfroEconomics members, there's more responsibility that's put on you to have an understanding about investing and good investment tips and good investment ideas, and how you should be setting it up. But, the responsibility is more and more on you. Like some of you, that's funny. It would be interesting if I pop one of y'all up on this so I can see, because I can always change people that are in the webinar. I can change you to a panelist real quick. So if you have a specific question and you don't mind being on camera, raise your hand. You should have a way that you should raise your hand or chat to me, because I can see you chatting. We've been chatting as we were warming up. That we were chatting. Oh, thank you. Someone actually came into the chat room and gave her email. Thank you so much. But in the chat room, offer up your email, because my executive assistant is watching, and she's in there and she's taking it down, and before you know it, you'll be getting all of the email information. So, and invite your friends. If you have friends that are near you at work right now, that are somewhere that can log on, tell them to go into AfroEconomics with JB Bryan on YouTube. It's streaming live right now. And so let's talk. I want to make this quick so y'all can go get a really good, healthy lunch. So let's talk. So some tips for investment selection, because a big part of AfroEconomics, the 10 principles, one of these 10 principles, you see I have the Indicra symbols in there because, of course, the first principle is legacy. But as you go into it, you'll realize that it is about self-reliance, financial independence is number 2. And number 3 is organization and planning, you know, and number 4 is what we are working on today. Principle 4, knowledge. What you don't know can hurt you. So I focus on that every Wednesday doing these discussions because we want to increase our knowledge. So this is an inexpensive way to make sure that you have just a little checklist. Like the 10 principles are really set up so that I can have an organized way for me to address my own things and just to share it with you through the book. The first thing I want you to think about when you're talking about investing in stock investments is that because the stock market, as we see on the news, is reaching all these new record highs, historical highs, all these things. And we're talking, when I say stock market, I'm talking about the S&P, I'm talking about the Dow Jones Industrial Average, talking about the NASDAQ, all the things that you see, these indices of compilations of stocks. So that these are what what you're seeing and you're hearing, and it's making you think like, you know, what am I doing? What am I participating in? What do I have? How can I get in on this? What's going on? How is everybody else doing this? I'm not doing it. So I want to increase your confidence and let you know that if you have a retirement plan at work, most likely you do have some money in the stock market. So we need to sit down and look at what are you currently investing in? What are those mutual funds, for example? What are they investing in? What companies are in that mutual fund? And that's the stocks that you are already participating in. You know, so sometimes people go, well, I wish I had such and such a stock, and I can look at their portfolio and I go, yeah, well, you already have it in there. It's in there. It's one of your top 10 components, actually. But you have to know what you have and get a better understanding of how to find out. And I have all that kind of research. That's what I do. That's what my job is, to help you know what you have or what you should be doing and how to, most importantly, I think it's about learning to maximize what you already have. I know that you will all agree that a lot of times we're not taking full advantage of what we actually already have available for us. So thank you all for participating. So make sure you respond to the poll so it will get out of your face. So we have 75% still on the business, more and more people saying they want to start their own business, and debt freedom, you know, is a very far second. So so let's say that number 1 that I want you to have a plan. I want you to be organized, have a plan on why and what is my purpose behind this money. Because too often when we approach the stock market, I will say, well, I have some money and I want to buy a stock, and you just want to buy the stock because you feel that this is going to, if you put it in the stock, then it's going to double, and then you're going to be able to pay off this, you know, debt that you have. And, you know, so that's, in many cases, we don't have a proper plan and don't understand that there may be a there may be a low likelihood, I don't want to say impossible, anything's possible, but it may be highly unlikely that you will double your money within a year or 2. So that you need to have a better understanding of what to expect. So having a plan will let you know what is a logical expectation for these investments that you're choosing. And then know what your risk tolerance is. Know what your risk score is. I have on the website, you go into jbbryan.com, you can click right into the corporate site and it will say, get your risk score. And it will allow you, or if you can, if you're participating now, just email me and say, can you send me the risk analysis? And, but it's a big part of, you know, having the risk score doesn't tell you anything until we really utilize it for looking into your portfolio. So it's really helpful for the members as they're making their plan. So knowing what your risk tolerance, what's your risk score, knowing your time horizon, all these are things that I believe you should do first before you do any investing. Have a plan for your money, know your time horizon, know your risk tolerance, and get a better understanding and increase your knowledge about how the stock market works in the first place. So we got, So we really need to make sure that we focus on that, because we're always being pushed and approached by people telling us this is the perfect thing to do. But very rarely, and that's why AfroEconomics is so important, because very rarely do we have a regulated advisor telling us how we need to approach investing. I saw this interview the other day, and it was on a national program. And they said to the guy who's very popular, and they said to him, are you a financial advisor? And he skipped the point because he's not a financial advisor. He's just very popular and he likes to talk about money. I wish that he had just said, because there's no power in us not telling us the full truth. I wish he had said that I am a motivational speaker. I talk about wealth. I've been a teacher. I have teaching experience. You know what I mean? I have multiple degrees. I have advanced degrees, you know, but I'm not, you know, a financial advisor. I'm not regulated. I'm not, you know, I'm not regulated, first of all. So when you're working with a financial advisor, you need to find out the first thing is, are they licensed to put you in investments? Are they regulated completely? So these are the things that we have to understand as the first part of when you start talking about stocks and somebody's giving you stock advice, can they really give you stock advice? Because most likely, if they're regulated like I am, you're not going to hear me come on here and tell you, everybody that's participating on my poll, that this particular stock is relevant to you. I know that that's illegal. It is not applicable to the same thing that's applicable to the 100-year-old lady is not applicable to the 22-year-old man. You know, there's differences and differences. That's why I said that what I have to approach this with, do you have a plan? Do you know your risk tolerance? Do you know your time horizon? What's important to you? What's it all for, right? Just like in this poll, now we have 20% of people participating who said they want investment selection support. So then 20% say debt freedom, and then 60% are saying they want to start their own business. So everybody has to know what their plan is. So if I'm telling someone how to invest and they want to start their business next year, I might say, well, you need to have more money liquid, because you're going to have your business is going to demand that you have some cash flow in order to get this started so that you can continue to eat. So we want to make sure that you learn that is some things that you need to, first thing that you approach anything and how you spend your money is having a plan. And then a second point is be careful. And I kind of spoke on that, you know, be careful, but be very careful on who you take your advice from, who you get your tips from, what you're doing, what's the background on the situation, how that particular investment is traded, how that investment itself is regulated, where their numbers came from, and do they have to report? Are they publicly traded? Are you buying a stock, but it's not really on any stock exchange? While these things happen, you go, how can somebody do that? Like, what was somebody saying? They like to watch that show about American Greed or something like that. And like, how could they do that? Wow, I mean, when I watch it, I go, wow, how could they let somebody do that? But it happens. So be very careful when you hear things like, this is a hot tip, this is a great idea, and you know they're not talking to you specifically about your needs, then you know that they're not supposed to be doing that. We're not supposed, anybody that's regulated knows better than that. So hot tips you are not going to get from someone who really should be giving you ideas specifically for you. Get you a financial advisor. Get a financial advisor. You deserve it. And then a third point is, don't make long-term decisions based on short-term changes. No, and it's so important to really listen to that. Don't make long-term decisions based on short-term changes. A lot of times people will see that the market has gone down and they'll sell everything that they have, you know, because, or they'll take their whole life savings and put it into a particular stock because it's over the short term, over the last year, it's gone up so much, so dramatically. So they put everything they got into that. So they're making a long-term decision, something that's going to affect them over the long term based on a short-term change. So they have to be very careful. That's why, you know, I believe in having well-diversified portfolios. That's why those assets, the portfolios that you hear me speak about, the AfroEconomics portfolios, are based on your time horizon, your risk tolerance, and how much money you're going to commit to that, how well diversified, what other investments you have, and not just, oh, this is the one that did great, or this had the best year last year. That's not the appropriate way for you to make your long-term decisions based on just a short-term performance. It's deeper than that. So don't make long-term decisions based on short-term changes. The excitement, even the excitement of how well the market's going now, should only just affirm, just confirm, just add confidence to the fact that, yes, at every point in our life, we should have some money in the stock market. It does present you with growth opportunities, but you still also need to be diversified across other asset classes too. So that definitely keep that in mind. Don't make long-term decisions based on short-term changes. A fourth point is to don't emphasize the things that you might hear us talk about. Like you might say, oh, I hear this one a lot. They go, oh, they're doing a stock split. That's not a buying decision, because the company's having a stock split and their stock price went from 100 to 50 and you can buy more. I mean, if you had bought it before at 100 and it split, you'd have twice as many. So you don't make a purchasing decision based purely on stock splits, stock price, the PE ratios. No, it has to be everything. We have to consider everything into that decision. Don't let they go, well, oh, their earnings went up, blah, blah, blah amount last year. Their earnings went up 100%, but how were their earnings the year before? So you're just sold on the fact that they doubled their earnings or, whatever. But that doesn't mean, they could have had a horrible year last year. Why? So don't let just a little bit of information be why you made the decision. We want to look at everything. Look at the whole, don't just look at look at the cover. Look at the contents. Make the look at what's inside. Look deeper. And so then a fifth point is to resist. And this might be a personal thing because I really don't like when people ask me about, you heard about that stock and it's at 5 cents or it's at 2 cents or because it's so cheap, you can get like 1,000 shares, for $1,000 and, be very careful with these penny stocks. They're called penny stocks for a reason. Be very careful. Get help. Get advice. You talk with your advisor and they say it's a bunch of crap, but you still want it. Realize you made that decision. And so be very careful. Be very careful. $1,000, $1,000, and people will say, "Oh, it's just $1,000." $1,000, $1,000. $1,000 can change the world for a lot of people. So just be very conscious of every penny that you spend, every penny that you invest. Be on it. Stick to your plan is my 6th point. If you set up a plan that I'm going to invest this amount of money every month, I'm going to put it into this particular mutual fund, or I'm going to put it into this particular ETF. If I'm going to put it into this particular model portfolio, I'm going to put it into this, then stick to your plan. Stick to your plan. There's something called dollar cost averaging. That's when you're putting in the same amount every month or every week or systematically. You're systematically putting in the same amount. And what happens is if you're putting in the same amount, when the market is doing great, well, you might only get 2 shares. But when the market is doing terribly, you might get 4 shares. So it allows you to actually reduce your average cost per share because you're systematically investing regardless of the market conditions. So, when you look at the graphics on it, dollar cost averaging, being consistent really can pay off for you over the long term. But you got to do it and you got to stick to your plan. If you make a plan and let something major happen, there has to be a major decision on why you change your path. But don't be so quick just to give up because of what you saw on the news. But have a particular reason why, that you changed or got off course or stopped, or because there's always going to be things in life. So it's going to be, in order for things to really happen and accumulate for you over the long term, you're going to have to stick to it. Investing, just like paying off debts, same thing. You got to stick to it in order to get rid of it. And investments, you got to stick to it in order to accumulate it. And it's never too late. And 8th point is to adopt a long-term perspective. And I think that that's been like my undertone. I think that all of you would agree with each of the businesses, each of the goals that you've said that. And when you started off this discussion, we said, I had a poll up, and those that are in the webinar will see that the poll says, the majority of people said that starting their own business is their main financial goal. Now, they have to have a long-term perspective. I've been working my business since 1995. That's over 20 years. There have been a lot of things that have happened to not only the stock market, but to me personally since 1995. Long-term perspective is the only reason I'm still here. The only reason I'm still here. So long-term perspective. If you're making an investment in your business, you're making an investment in your stock market, you're making an investment in school, you're making an investment in your job and your career, long-term perspective can pay off for you. It really can. But we have to make it work. Paying off debt, long-term perspective. Can't get caught up. I was sitting down with a client of mine, and I've known his son, now he's finished college and everything. And then he was showing me his school loans and how he wants to pay them off. And I said, man, you got it done though. And they can't take back what you got. You were young. I said, I see people twice your age with more school loans than this. You got to keep that long-term perspective. Before you know it, that'll be knocked out. All you got to do is boom, 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 hit it. Just hit it every time. Hit it every day. Hit it up. Hit it. You put a dollar in a jar. Whatever it is, just whatever. This is my loan fund. This is it. Do one less pizza, one less this, one less that, whatever. Put that money, what you would have spent on the pizza, into that jar and this and that, and cook at home. But just long-term perspective. And before you know it, it's done. Before you know it, it's done. And the 9th point is to, be open-minded. The fact that you're sitting here listening to this discussion with me is you're open-minded, because we have been so socialized that everything is supposed to come quick, and that the stock market is some sort of get-rich-quick strategy and this and that. But when we look at the graphics and things, you will see that if you invest in something and you allow it to grow over generations, the next generation will benefit a lot more than what we will benefit from it. No matter what, no matter how much we make, if we are thinking the right thing and doing the right thing, our legacy can benefit from it even more because of compounding returns over a longer period of time. So the earlier you start with whatever you think. And so, but we've been too socialized to think that because we don't have much, it doesn't matter. But what is not a lot to you right now is a whole lot. Is a whole lot down the road. I was looking at these Social Security calculations, and it was showing like the income of a person from when they first started their career. And then it was saying like, oh, the maximum income that they would actually take a percentage off of so that you could put it into Social Security. And it was like started like back in the 1930s. And the maximum was like $5,000. And if you make over $5,000 a year, then you didn't have to put that extra into Social Security, and then now it's like 100, over 100, almost $200,000, before you have, you don't have to put any money into Social Security for that extra income, and I was like, wow, look at that, over that person's lifetime. We might not see it, over the short term. They might not have really noticed what was happening over their lifetime and how their income has grown. And unfortunately, over these last 10 years, a lot of people haven't seen that. If anything, a lot of people have seen a decline. But they can see an increase in their investment if they just make sure that their debts are declining, regardless of their income. We can't, and many people can't control, I would say all of us, we really can't control our income. but we can control how much we spend. So let's control what we can control and focus on the long term, focus on the legacy of why we have to invest, why we have to create ownership. You know, a great way to own is through purchasing into the stock market. And it is a lot easier to do a lot of other investment opportunities to do. You don't have to get a loan. If you want to own a stock, you can just buy the stock. So I hope that you will consider allowing me to be your advisor and help you get along and maximize what you're doing. A lot of us are participating in work retirement plans. We get to the end of our career, and that's the first time we talk to a financial advisor. That's not good. You should be getting help while you're accumulating that, investing it correctly. And that's where an investment advisor comes in versus a lot of times we're only working with salespeople. That's a problem. You need to focus on finding a registered investment advisor to work with. And then a final point is, with all of your investments, say you have stocks right now, say you have mutual funds right now. I was talking to a client, this is a good example, yesterday, and he was saying, I called this mutual fund company, and I was asking them about if I sell this and I need some money out of a mutual fund, you know, what they're gonna do. And I've already been paying taxes on it because it's not a retirement account. I pay tax on it every year. And I was explaining to him how capital gains work and cost basis work. So we have to make sure that when we're selling things that we have a strategy that we understand. But the one thing that the brother was doing right is he was asking questions. And when the answers weren't what he wanted, he called his advisor and said, wait a minute, you know, he said, what, you know, I don't know what to tell him. What he said, I said, okay, you know, and explain the situation. But thank God that I was there to help him address it correctly, you know, so that he could do the right thing and how to plan out the tax strategy. But we got to think before we make that move. He was thinking. That's a blessing. Thinking. So the final point is that you have to have a tax strategy with your stock purchases and stock sales, and make sure that you learn how to know when to hold them and know when to fold them. A lot of times we hold on to things way too long. If you know it's a loser, and write down at the beginning, no, and part of your plan should be, this is what I expect out of this. If I don't get this within this period of time, then I'm got to get rid of this, you know, and focus on your winners. Focus on your winners, get rid of your losers, get some advice, get a team together. We can win. You can win. Well, let me make sure before I leave y'all, that you, someone said that they saw an interview. They saw the interview that I was talking about when they were asking someone about if they were an advisor. That's right. And so be very careful and ask questions and work with the right people So be very good. Thank you so much for everybody that participated and asked questions. Thank you so much. Thank you for participating in the webinar. Thank you for participating in the poll. Thank you for watching on YouTube. Email me anytime at jb@jbbryan.com. Check out the book and allow me to assist you. Consider a membership in AfroEconomics. In closing, have a wonderful, blessed day. I'm JB Bryan, President and Chief Investment Officer at JB Bryan Financial Group, a registered investment advisory firm in New York, Virginia, Washington, D.C., and Maryland. Be blessed, and AfroEconomics.com.